Trump calls tariffs on China a tremendous power but prefers not to impose them. Bank of Japan raises interest rates to their highest level since 2008. And OPEC Plus yet to respond to Trump's call to lower oil prices. Welcome to the Qnews Economic Bulletin, where we bring you the latest developments shaping the global economy. From key market trends and financial updates to regional economic highlights and forecasts, we provide you essential news and analysis to keep you informed. Welcome back. We start off with the United States, as the National Association of Retailers has reported the U.S. existing home sales rose 2.2% in December, reaching a seasonally adjusted annual rate of 4.24 million units, the highest since February. This marks a 9.3% year-on-year surge, the largest since June 2021. Despite December's recovery, total sales for 2024 fell to 4.06 million, the lowest level in nearly 3 decades. Elevated mortgage rates and house prices continue to deter many buyers, with the 30-year fixed-rate mortgage averaging just below 7%. The median home price rose 6% year-on-year to $404,400 in December, with inventory down 13.5% from the previous month. Consumer sentiment in the U.S. declined in January for the first time in 6 months, driven by worries about the labor market and potential price hikes tied to President Donald Trump's proposed tariffs on imports. The University of Michigan's Consumer Sentiment Index dropped to 71.1, down from December's 74.0 reading and below economics expectations of 73.2. The decline was widespread, cutting across income, wealth, and age groups. Despite reports of stronger incomes, unemployment concerns grew, with nearly 47% of consumers anticipating higher unemployment rates, a level not seen since the pandemic-induced recession. U.S. President Donald Trump, speaking via video at the World Economic Forum in Davos, has outlined his plan to combat inflation and illegal immigration while boosting fossil fuel production. Trump emphasized deregulation and making the U.S. a hub for artificial intelligence and cryptocurrencies, alongside extending tax cuts from his first term. He pledged to harness the country's vast oil and gas resources to reduce costs and strengthen U.S. manufacturing. His comments come amid market concerns about his tariff proposals, set to begin on February 1st. Saudi Economy Minister Faisal Al-Ibrahim clarified that a $600 billion investment plan announced by Saudi Crown Prince Mohammed bin Salman includes both public and private sector investments and procurement, reflecting the strong ties between Saudi Arabia and the U.S. Al-Ibrahim emphasized that the kingdom's total spending for Vision 2030 would far exceed the $600 billion, with plans to invest 12 times that amount by 2030. Regarding oil prices, he affirmed Saudi Arabia's focus on long-term market stability, aligning with OPEC's strategy to ensure sufficient supply amidst growing global demand.
Hello, President Donald Trump addressed the World Economic Forum remotely, presenting a bold vision for the U.S. economy. Trump described his administration's actions as the start of a golden age for America, highlighting immediate steps to tackle inflation, high debt, and economic instability. He declared a national energy and inflation emergency, froze government hiring and regulations, and scrapped the Green New Deal and Paris Climate Accord. The president also announced plans for the largest tax cuts in U.S. history, alongside a commitment to eliminate outdated regulations and introduce tariffs on foreign-made goods. Trump emphasized that his administration is positioning the United States as a global manufacturing hub, with energy independence and AI leadership as central pillars. Major global investments were announced, including a $500 billion AI infrastructure project involving Oracle and OpenAI. Trump also revealed a $600 billion Saudi investment in the U.S., with talks underway to increase that figure to $1 trillion. In international remarks, Trump urged Saudi Arabia and OPEC to lower oil prices, stating that this would pressure Russia to end the Ukraine war. He further called for NATO members to boost defense spending to 5% of GDP. Closing his address, Trump pointed to America's economic optimism, record investments, and future milestones like the country's 250th anniversary, the World Cup, and the Olympics as signs of a brighter future under his leadership.
U.S. President Donald Trump has stated that while he would rather not impose tariffs on China, he sees them as a tremendous power in trade negotiations. Trump also mentioned that his recent conversation with Chinese President Xi Jinping was friendly and expressed optimism about reaching a trade deal with China.
I put tariffs on China. We took in hundreds of billions of dollars, and Biden was unable to end them because it was so much money you couldn't do it in terms of the budget. He wanted to end them. He did everything he could to end them. He couldn't get it done. But we have one very big power over China, and that's tariffs. And they don't want them, and I'd rather not have to use it. But it's a tremendous power over China. China gets a lot of its money from the United States. They use that money to build a military. Isn't it crazy?
And now we move to the latest developments from around the world. Speaking at the World Economic Forum in Davos, IMF Managing Director Kristalina Georgieva has commended global policymakers for their strides in addressing inflation without triggering a recession. Using a vivid metaphor, Georgieva described inflation as a genie partly contained, but with work remaining to fully secure it. Georgieva's remarks highlight the need for sustained efforts to combat inflation and maintain economic stability, signaling that the challenge is not entirely resolved. Ladies and gentlemen, now we move to North Carolina for a live broadcast of U.S. President Donald Trump.
North Carolina was very unfairly treated, very, very unfairly treated. And it was obvious. It was too obvious. And we're going to make up for lost time. So thank you to the people of North Carolina. Thank you, everybody.
Now, joining us from Washington is National Security Analyst John Rossomando to discuss the latest developments related to the U.S. President Donald Trump's address at Davos and its impact. Mr. John, thank you so much for joining us on the Economic Bulletin. And first off, Trump described his actions as the start of a golden age for America. Do you think his measures, such as freezing government hiring and scrapping the Green New Deal, can realistically address inflation and economic instability?
Well, as Milton Friedman repeatedly said, inflation is a government spending problem. So by constraining government spending, should begin to start reducing inflation in the U.S. And considering the global economy is reliant on the U.S. dollar, if we're able to cool down inflation here in the U.S., it will have a strong impact on the rest of the world. And if we look back to the Reagan era over 40 years ago, he came to power in 1981 with double-digit inflation. However, it had been half within the first 4 years of his term. So I'm optimistic.
Now let's address the proposed largest tax cuts in U.S. history. How might they impact the federal deficit and public services?
Well, I think that it won't necessarily impact government services. I think that in the short term, we might see an increase in the deficit. But however, we need to do what Elon Musk and President Trump have been talking about in terms of curtailing spending, because increased government, increased economic activity will increase the revenues to the federal treasury, and it will be good for everybody.
Mm-hmm. Now, Trump's emphasis on energy independence includes declaring a national energy emergency. What practical steps could follow this declaration?
Practical steps should be freeing up leases for oil and gas exploration on federal lands, removing the Biden administration's ban on the drilling for oil up in Alaska, and restarting the Keystone XL pipeline, which in the short term will increase the amount of projected available resources, which would bring down the price of a barrel of oil and gas prices.
Now, moving on to China and the possibility of imposing tariffs on it, President Trump described tariffs as a tremendous power in trade negotiations. How effective have tariffs been historically in achieving favorable trade deals, particularly with China?
Well, I think that President Trump showed that he would be able to partly deliver in terms of getting the Chinese to the table. The tariffs are a negotiation tactic aimed at getting a favorable outcome. I think it's kind of interesting. When President Trump was about ready to impose his tariffs in 2019, you had the pandemic the following month. So the Chinese are hard to predict, and I think that it will do better than just simply going along, which created a massive trade deficit.
Now, integrating AI into our conversation, how significant is the $500 billion AI infrastructure project involving Oracle and OpenAI? Could this position the U.S. as a global leader in artificial intelligence?
Absolutely. The United States government invented modern artificial intelligence going back decades. But putting a $500 million R&D investment could help the United States to catch up with the Chinese and to surpass them in terms of obtaining this technology, which will transform every aspect of American life.
Thank you so much, Mr. John Rossomando, for your valuable insights and for joining us here on the Economic Bulletin. Now, back to our news. The Bank of Japan raised interest rates to their highest level since the global financial crisis of 2008. The decision reflects growing confidence that rising wages will stabilize inflation around the 2% target. Both Governor Kozo Ida cited the weak yen's impact on import prices and broad-based wage increases as key factors. Since taking office in April 2023, Ida has shifted away from radical stimulus, marking this as the second hike under his leadership. Policymakers aim to maintain rate increases if Japan achieves a sustainable cycle of higher inflation, driving wages and consumption, enabling firms to pass on costs. China's finance ministry has reported that the country's fiscal revenue grew by just 1.3% in 2024, a significant drop from the 6.4% growth recorded in 2023. Total fiscal revenue reached 21.97 trillion yuan, with tax receipts down 3.4% year-on-year at 17.497 trillion yuan, and non-tax revenue surging 25.4% to 4.473 trillion yuan. Local governments struggling with cash shortages increasingly relied on fines, confiscations, and administrative fees, eroding business confidence. Premier Li Qiang has pledged to address the abnormal growth of such revenues to improve the business environment. LinkedIn is being sued in the U.S. for allegedly sharing users' private messages with third parties to train AI models without their consent. The legal action claims that LinkedIn introduced a privacy setting in August that automatically opted users into a program, giving companies access to their data for AI training. The lawsuit further alleges that LinkedIn tried to cover up its actions by updating its privacy policy and fact sections. Filed on behalf of LinkedIn Premium users, the lawsuit seeks $1,000 per user for violations related to data storage and California's unfair competition law. LinkedIn has denied the claims, calling them false and without merit. Britain's Competition and Markets Authority has launched dual investigations into Apple and Google to assess whether their dominance in mobile operating systems, app stores, and browsers breaches the UK's Digital Markets, Competition and Consumers Act. Apple emphasized its commitment to innovation and user trust, highlighting the iOS app economy support for jobs and developers. Google defended its Android platform, citing its role in expanding choice and reducing prices while advocating for balanced regulation that supports growth. The CMA aims to explore competition between the tech giants, potential abuse of market power, and practices that may stifle innovation. OPEC Plus has not yet reacted to U.S. President Donald Trump's appeal to reduce oil prices made during the World Economic Forum in Davos. Trump called on Saudi Arabia and OPEC to lower costs, suggesting that cheaper oil could help end the Russia-Ukraine war. However, Saudi Arabia's economy minister reaffirmed the group's commitment to long-term market stability. OPEC Plus plans to increase oil output starting April 2025, following delays due to weak demand. Brent crude recently hit $83 a barrel before easing to $79 amid supply concerns tied to U.S. sanctions on Russia. Oil prices steadied on Friday, but were set for a weekly fall after U.S. President Donald Trump announced sweeping plans to boost U.S. production, while demanding that OPEC moves to lower crude prices. Brent crude futures inched up 0.06% to $78.34 a barrel, while U.S. West Texas Intermediate crude was down 0.19% at $74.48. Over the week, Brent has lost nearly 3%, while WTI is down close to 4%. Gold prices climbed over 1% on Friday, closing in on its all-time high hit in October as a weakening dollar on U.S. President Donald Trump's push for lower rates and tariff uncertainty drove the metal towards its fourth straight weekly rise. Spot gold rose 0.9% to $2,778.03 per ounce and was up 2.8% for the week. Prices are at their highest since October 31st, when they had a record high of $2,790.15. U.S. gold futures for February delivery rose 0.7% to $2,785.10 per ounce. U.S. President Donald Trump has directed the formation of a cryptocurrency working group to propose new digital asset regulations and consider the establishment of a national cryptocurrency stockpile. The move fulfills his promise to overhaul U.S. crypto policy. The order includes a ban on the creation of central bank digital currencies in the U.S., which could rival existing cryptocurrencies. In a win for the crypto industry, the U.S. Securities and Exchange Commission rescinded costly accounting guidelines, easing restrictions on companies safeguarding crypto assets for third parties. In response to U.S. President Donald Trump's push to promote stablecoins, which are cryptocurrencies pegged to the U.S. dollar, European Central Bank Board member Piero Cipollone has called for the creation of a digital euro. Trump's executive order, which aims to develop dollar-backed stablecoins globally, is seen by Cipollone as a challenge to banks and a driving force for the European Central Bank to launch a digital currency. Cipollone emphasized that Trump's move could draw customers away from traditional banks, further highlighting the need for a digital euro to prevent disintermediation and loss of banking fees. In markets, global stock markets rose Friday after a record day on Wall Street in response to U.S. President Donald Trump's tax cut pledge and his more friendly comments with regard to China. France CAC 40 rose 0.40%, while Germany's DAX inched down 0.10%, and Britain's FTSE 100 declined 0.76%. The future for the S&P 500 was down 0.13%, and that for the Dow Jones Industrial Average dipped 0.25%. Hong Kong's Hang Seng up 1.86%, while the Shanghai Composite rose 0.70%. In Tokyo, the Nikkei 225 index was down 0.07%, and Australia's S&P/ASX 200 rose 0.36%. In the MENA region, President of Cyprus has announced plans to attend the signing of two significant agreements for the development of the Qnews and the Aphrodite gas resources in Cyprus' exclusive economic zone in Cairo on February 17. Following an invitation from Egyptian President Abdel Fattah el-Sisi, he stated that the agreements mark another important step in promoting regional growth and cooperation between Cyprus and Egypt. Minister of Investment and Foreign Trade Hassan al-Khatib has highlighted that Egypt's foreign direct investments reached approximately $46.1 billion in 2024, compared to around $10 billion in 2023. Speaking on the sidelines of the 2025 Davos Forum, al-Khatib also highlighted that one of the key features of the National Industrial Development Strategy through 2027 is the government's goal to achieve an industrial growth rate of 8% and increase the industry's share of GDP to 20%. Notably, this significant increase was primarily driven by the Ras Al Hikma deal, valued at $35 billion. That's all for now. Here's a wrap-up of what we've covered. Trump calls tariffs on China and tremendous power but prefers not to impose them. Bank of Japan raises interest rates to their highest level since 2008. And OPEC Plus yet to respond to Trump's call to lower oil prices. This concludes our economic bulletin for today. Don't forget to follow Qnews on YouTube, Facebook, X, Instagram, and TikTok at QNewsEG to stay informed. Thank you for watching and stay tuned for more updates on Qnews.